Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, October 15th, 2025, and here is everything you need to know as the markets open for today. Wall Street witnessed extreme volatility in yesterday's session as renewed trade tensions with China rattled markets before a late-day recovery. The Dow Jones Industrial Average managed to close higher by 203 points, or 0.4% to 46,270, staging a remarkable comeback after being down over 600 points earlier in the session. However, the S&P 500 slipped 0.2% to close at 6,644, while the tech-heavy Nasdaq declined 0.8% to 22,522. The market turmoil was triggered by President Trump threatening to embargo cooking oil trade with China in retaliation for Beijing's refusal to purchase American soybeans. China also imposed sanctions on 5 U.S.-linked subsidiaries of South Korean shipbuilder Hanwha Ocean, adding fuel to the fire. The fear gauge VIX spiked above 22, hitting a 4-month high. However, Federal Reserve Chair Powell's dovish remarks around mid-session helped restore confidence, as he signaled 2 more rate cuts are likely this year. On a bright note, the small-cap Russell 2000 index broke new records, surging nearly 2%, clearly benefiting from the lower rate environment. Big bank earnings kicked off the third-quarter season, with JP Morgan, Goldman Sachs, and Wells Fargo all beating expectations, though their stocks traded mixed as expectations were already elevated. Looking at Indian ADRs overnight, the performance was mixed to slightly negative. Infosys ADR declined 1.85%, while Dr. Reddy's Labs dropped 2.75%. On the positive side, HDFC Bank ADR and ICICI Bank ADR showed resilience, staying nearly flat with marginal gains of 0.09% and 0.61% respectively. Wipro ADR managed to edge up 1.49%. The weakness in tech ADRs mirrors the broader sell-off in U.S. technology stocks, which could weigh on domestic IT stocks today. However, the stability in banking ADRs provides some comfort for the financial sector. Turning to Asian markets this morning, sentiment appears cautiously positive despite Wall Street's turbulence. Japan's Nikkei is expected to open higher after yesterday's sharp 2.58% decline. Hong Kong's Hang Seng futures are indicating an upward opening after the index fell 1.73% yesterday. Mainland China's Shanghai Composite had dropped 0.62%. Investors are closely watching China's inflation data releasing this morning, which could impact market sentiment and antipodian currencies. The Gift Nifty is currently trading around 25,265, up approximately 70 points or 0.3% from yesterday's close. This indicates a cautiously positive start for Indian markets, though the gains appear modest. The overnight recovery in U.S. markets and Powell's dovish stance are providing some support, but escalating U.S. China trade tensions remain a key overhang for Asian markets. The dominant theme globally remains the deteriorating U.S. China trade relationship. President Trump's threat to terminate cooking oil business with China and potential additional 100% tariffs from November 1st, if China doesn't roll back rare earth export controls, is creating significant uncertainty. China has halted all soybean purchases from America, impacting U.S. farmers severely. This tit-for-tat escalation poses risks to global growth and supply chains. On the positive side, Fed Chair Powell strongly hinted at continued rate cuts despite inflation remaining above the 2% target, acknowledging that downside risks to employment have increased. Markets are pricing in near certainty of a 25 basis point cut at the October 29th meeting, which should support risk assets. Crude oil prices continue to slide, with Brent falling to around $62 per barrel on demand concerns, and a bearish IEA outlook projecting record global surplus in 2026. On the domestic front, equity markets yesterday extended their decline for the second consecutive session. The Sensex fell 297 points or 0.36% to 82,030. While Nifty dropped 82 points or 0.32% to 25,146. Broad-based profit booking amid weak global cues and lack of fresh domestic triggers dampened sentiment. Foreign institutional investors remained net sellers, offloading over 1,000 crores yesterday, while domestic institutions provided strong support with net buying exceeding 3,000 crores. The sustained FII outflows totaling nearly 2,000 crores so far this October remain a concern. Today, several major companies are reporting earnings, including Axis Bank, HDFC Asset Management, HDFC Life Insurance, Tata Communications, and Oberoi Realty, which will be key focus areas. From a technical perspective, Nifty 50 has found crucial support around 25,050 to 25,000 levels. Immediate resistance is placed at 25,300 to 25,350. The index continues to hold above all key moving averages, maintaining its higher high, higher low formation, which suggests underlying strength despite near-term consolidation. A decisive break below 25,060 could trigger further weakness toward 24,950, while a move above 25,350 would resume upward momentum. Bank Nifty has support at 56,000 and 55,600, with resistance at 57,000. The index is signaling consolidation after its recent rally. As long as it holds above 56,000, sentiment remains positive, with potential for a short covering rally toward 57,300 if it crosses 56,900. In commodities, crude oil continues its downward trajectory with WTI trading around $58.67 per barrel and Brent at $62.30, both down over 1%. The decline reflects concerns about U.S. China trade tensions impacting demand and the IEA's bearish forecast of record surplus next year. Gold has surged to new record highs, crossing $4,168 per ounce, up 0.6% as safe haven demand intensifies amid geopolitical uncertainty. In India, gold prices today stand at 1,26,326 rupees per 10 grams, up nearly 1.5%. Silver is also rallying strongly, trading above $51 per ounce globally, benefiting from both safe haven flows and industrial demand. For today's session, traders should remain cautious given the elevated global volatility and mixed cues. The modest positive opening indicated by Gift Nifty could fade quickly if global sentiment deteriorates further. Focus should be on stock-specific opportunities, particularly in banking and select defensives, while avoiding aggressive positions in technology stocks given weakness in U.S. tech overnight. Watch the 25,050 level closely on Nifty. If this support breaks, consider booking profits and adopting a wait-and-watch approach. For those with a positive bias, any dip towards support zones could offer buying opportunities in quality large caps, but maintain strict stop losses given the uncertain global backdrop. Earnings announcements today will drive stock-specific action, so position accordingly. Stay tuned for the evening wrap where we'll break down the day's action and what's ahead. Send in your questions and keep tracking the markets with us.